today's a good day to be talking metals,
we were
right?
Just talking the
right.
last time we were together.
The last
money. You asked
right.
everybody to
and
use one word, and the word suicidal.
It was the
came
worst.
Up.
I went
Leak
home.
Came up.
Trey, I went home depressed that day. So hopefully
6 weeks ago, how things can change.
How things can change indeed. So welcome everyone. Obviously we're going to talk about the mining sector, then move on and talk about the physical metals. So I want to start today by looking at the junior mining space, which, I was reading a recent article from the National Post, which said it's Canada's shrinking junior mining sector, which is struggling for relevance and cash. Chris, I know this is something you've brought up in the past. So how bad is the situation?
I think it's pretty bad, and maybe rightfully so, and that's the question in terms of should capital be available to junior companies which are exploring, and which it's an enormous amount of risk that goes into to an exploration project, and we've seen over time that lots of these projects which eventually get capital and then get built don't operate according to plan and actually lose investors' money. So in the gold mining sector specifically, it might be actually somewhat constructive to have a period of time when there is a lack of new projects being built, which might not be very economic. And that could be actually really good for the gold price. So down the road where there's a lack of supply. So I think that it's bad, but given the amount of risk that investors take in financing these kinds of these companies, maybe it's okay to be in this part of the cycle now.
All right. Well, I just want to share this to put things into perspective here. So cannabis companies raised $4 billion in 2018 compared to $217 million by mining companies in the same year. Trey, any what can the juniors do here to turn things around?
One of our most profitable projects at Sprott is direct lending. So we have a lending team that I spent a lot of time with and overlap. And we did a project for Sean Boyd at Agnico Eagle recently, and we determined that their all-in cost of capital at AEM is about 5%, debt and equity. And the average junior is probably triple that now. It's probably 15, 16%. So, and these guys on this team have been doing it a lot longer than I have. And in their experience, this is the widest disparity between seniors and juniors in terms of the availability of capital in ever. It's never been this bifurcated in terms of the lack of equity out there for junior projects.
Can I?
Yeah, please.
So I think part of what's happening is there is a lack of capital. It's not the first time in the market we've seen that. You go back to the early 90s, it was like this. But I think this time what's different is there are other opportunities. We used to be a mining economy in Canada, and people would put money into these kinds of companies. Cannabis has sucked a lot of that capital out. It was Bitcoin, it was blockchain, it's cannabis. Now cannabis is a real business for sure. So but the high risk capital that is there, I think, will chase other sectors if we can give them a reason to come to our sector. And I think what's happening on the exploration side, which is really what we're talking about here, is the lack of capital for drilling. And the senior companies now are spending more money on grassroots exploration than they have spent in a long time, because the juniors are not delivering the deposits and the discoveries for them to develop and build. So to change that, I think we need to get better focus. We need help from some of the governments. Quebec does an incredible job in Canada to encourage exploration, but a lot of the jurisdictions make it super tough for guys to work. So you need to pick your spots. You need to be in jurisdictions where you can work and you can get your money to go as far as you can, because exploration is super expensive, and you know that you're only going to hit 1 out of 1,000 or 1 out of 2,000 or whatever the number is. So I think the space will come back. I think the gold price needs to help the space come back. I think For me, I don't know how the rest of the guys feel. For me, 1350 is probably the number. Sustainably above 1350, I think will bring capital back to the space. And if it doesn't stay above 1350, I think people just say, well, I can buy other things and they're going up. I mean, the overall market's done so well over the last 10 years. Why would you want to invest in a high-risk area like mining? But that will change, and the market will roll over. We're going to go through a market here probably in the next 5 years that's not going to be as good overall as it has been, and that's going to help our sector. Low rates are going to help our sector, and hopefully we'll get a gold price that will be supportive, and guys will start making some discoveries. But you don't see a lot of new discoveries out there, to be honest, but there hasn't been money spent.
Right. And you brought up government funding, so and that's an issue. If you don't get the government funding and you can't go out and find these new deposits, what happens now? That should eventually then be price positive for the metals. So is it
for me, actually, I don't mind the price. I think this price is a decent price. You can make decent money in this business at $1,300 gold. You can make a decent return. But I think we need to either have higher gold prices than that, or we need a rollover in the overall sector to bring capital into our space. Because I think if the overall sector rolls over, if the market rolls over, I think our sector will be one of the places that capital will go to. But a lot of capital is going to just park itself, to be quite honest, if it rolls over.
Any thoughts on that, Alain?
Yeah, I think Kira is actually bringing good point about capital allocation. So obviously the mining industry is in competition across, with the other industries, power, infrastructure, and you name it. And I don't know. I think I'm the only banker at the panel, so I should be probably the most pessimistic one. But I think it comes here with opportunities for the sector, right? Trying to reinvent itself, trying to find new ways to raise capital. The public market probably are not functioning the way they used to function. I was looking actually at the numbers. S&P is, I think, on a quarterly basis, issuing basically how much capital has been spent into exploration. Actually, it's been growing since 2016. It's not necessarily the peak. We've seen 2012 with like 10 or 12 billion dollars for gold, but it's been growing, at a slow pace, but it's been going up. I think basically juniors should probably trying to refocus about what they should do in terms of exploration, trying to team up with others as well, trying to also make themselves a bit more attractive. Everyone is passionate about their projects, about the results of our drill cores, etc. I think they need to probably continue to do a better job trying to bring probably some of the big guys or mid-tiers as well, trying to help this funding. And probably the other area as well is around, industry convergence. So actually, I'm not only covering mining, I'm also covering other sectors too. And we see a bit more of these other industries going and trying to get involved into other sectors. And everyone is talking about battery storage now, and all these sectors. So trying to have the juniors also looking long term as well, how their project could fit into that. I think that could be something, also an area just to attract capital. The other element, still linked to that, we're also doing some work with some juniors, which actually, been able to get some projects which have existing infrastructure. So they've been able to attract actually infrastructure funds, looking at their project, inject equity, trying to help them as well to develop the projects. So I think this current period is creating some opportunities, but I think people will probably need to look a bit broader, not necessarily at the space and just mining only.
But what is an investor to do here? I mean, would you advise to avoid the sector now, or do you see it as a buying opportunity, Chris?
I think so. The thing to do now is so from Kerry's perspective, also in terms of at what gold price does the juniors start to attract interest? I think it's a little bit higher. I think it has to go through 1,400, and then like that's not that we do technicals, but that is a line of resistance over the past 5 years. So it goes through 1,400 and stays there. I think that people start to price in 1,400 or higher into their analysis in terms of what a project's worth. But if the gold price stays in this, between 1,250 and 1,350 range, I think that the place to be is in the companies that have capital. So a company like Newmont, Barrick, even a company like SSR Mining or something like that, which we bought a little bit of recently, which has 2 mines which generate free cash flow, 3 mines which generate free cash flow now. They just built one in Argentina, and cash on their balance sheet. So they'll be able to deploy capital into the market and pick the best projects which have very high rates of return. And so that's the place to be, and that I think that's the place to focus. And again, I mean, that's positive for the industry.
You mentioned one company. Is there anything else you're buying or bought recently, Chris?
Yeah, well, we bought so that SSR. Another one that we bought, a company here that's presenting, is called Teranga, and that's a special situation also in terms of their ability to potentially be able to buy an asset which might be sold from Barrick called Massawa, which is bordering Teranga's property, Sabodala. So this is like, again, they're assets which are being sold, companies which have access to capital. So they have one mine that's operating, another mine that's just about to start operating. So they'll have so it's these kinds of things where there are special situations out there. There are ways to make money, but you have to look hard, and it's not really just buy the junior, which has some flashy drill hole results.
So that's your criteria checklist when you were deciding what are you looking for exactly there?
Well, for which one?
For general.
Well, in general, I mean, we want companies that are first of all, well capitalized, have proven in the past that they can generate value by buying projects and investing in projects. That's number one. And then number two, we're looking for these kind of squirrely special situations where we can hopefully add some value.
Anyone else on the panel
On the price movement, you were talking about 1,400. I would just footnote that as well. Between 1,400 and 1,500, we all remember where we were in April of 2013, right? I happened to be at an accepted students' day with my oldest son in Boston, and I finally said to him at about noon, I said, "You just can't speak to me anymore, right? I'm here, but when they had that Friday, Monday, 6 standard DVA, blah, 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 that all happened so fast that I'm not a technician either, but I don't mind using them when they support my case. But there's really nothing between 1,400 and 15 and a quarter because it was only there for a couple of weeks. So hopefully, if we can get through 1,360 and 1,400, the technicians will tell you we don't have much to eat through. So that's something to look forward to.
It's an interesting market, though, because the juniors have generally pretty low valuations, and the seniors aren't, or the majors, the intermediates and the majors aren't finding deposits themselves. There's a very long lead time to actually making a discovery and getting it permitted and getting it into production. And I think there probably will be more M&A if you have a project or an asset that makes sense for somebody. So it's not, I don't want to say there's going to be 20 deals in a year, but there will be a few. We have seen a few. And that's where I think if you can position your company properly and have an asset that's attractive to somebody, they might not pay you a huge premium, but the value that you can get for your shareholders in the pro forma company should be better than what you can get. Because for you to finance your project, that's the key. That's the difficulty. And, we've seen too many companies in the exploration space. You were talking about whatever it was, $270 million raised last year. Like our firm, we're not a big firm, but we were involved in $140 million of those deals. So we saw a lot of these deals. A lot of these deals were companies where they were raising money every time at the same price. And that's a recipe for disaster, to be quite honest. You're getting a bigger market cap, but you're not getting a bigger share price. And if your share price isn't going up, you're not rewarding your shareholders. And, last week I saw a press release from a company. Basically, it was New Legacy. They said, we're not going to spend another dollar in our treasury until the market is there where we can actually finance. I don't think that's a bad strategy, to be quite honest. I think you have to be realistic in the market and say, if I can't raise money at a non-dilutive price to what I think is non-dilutive, maybe I should just suck it back and wait. And that's what they're doing. And I think more companies probably will do that. It's not the answer for everybody, but for some it may be the answer until we get a market where you can finance at a reasonable price.
So on that note, let's talk gold forecast now, because we heard 1,315, 1,400. Now gold is having a good day today, catching a bit since last Friday. Powell's remarks this morning helping the metal, saying that the central bank has taken notice of the trade war talk, obviously with China and Mexico here, and like I said, gold getting a bounce here. So is this the real deal now? Should we believe the bounce in gold right now?
I'll go. I don't mind.
The guy with the most facial.
Because I feel like we've gone through this.
So look, we had a great run from 2000 to 2011. We went from 275 to 1923.
Right.
We've had 8 years of pain, and it's been pretty tough. I would say for me, in my 25 years, it's been the worst market I've seen. So for me, directionally, I would say it's higher. In terms of the absolute level, I think that's a function of a lot of different policy decisions that get made globally that I don't have a good feel for. So I'm prepared to say I think directionally it's higher. I think it's a good time to be owning junior stocks because they have the most leverage.
More than physical gold.
Yeah, for sure. Yeah.
Okay.
Yeah, for sure. I mean, people probably should own gold too as well, but I work for an equity shop, so I'm not up here trying to sell
Right.
trying to sell bullion. But so I think directionally higher. Like I think for me at least 1350 needs to be the price to get people back into our space. And I think if we can get people back into the space and people start making some money, I think you'll see that.
You think we'll see that within the next 3-6 months?
I don't know. I don't know that I have a feel. But, I think in the next 12 to 18 months, I think we should be, significantly higher than we are, 25% higher.
Alain, your thoughts on gold?
Well, in terms of forecast, that's, I think, an interesting question. If I knew, I don't think I would be seated here today. But look, I think probably within the band of 1350 to 1250, I think we'll probably stay there. Look, it depends of, interest rates and all the policies. In terms of capital going back into the juniors exploration, I think we need probably a bit more than just gold prices. I think Kerry again highlighted a very interesting point, which is just being disciplined. The example of New Legacy, I think it's a good one. It's at the end of the day, the industry is a capital-intensive industry, right? And you need to be disciplined the way you basically spend your money, and otherwise, basically, investors will just get fed up about just pouring a bit more money into the sector. So I think we need more than just gold prices, just to probably support more capital going back into the juniors.
Right.
On the gold, I think it's going to be a function of what the Fed ultimately ends up doing. So if the Fed does lower rates by the end of the year, or even a couple times by the end of the year, I think gold will go up from here. Will it go to 1350? Will it go to 1360, 70? I don't know, but I think it'll go up. Especially my big kind of thesis that I kind of try to tell people when I talk to about gold is that if you have the ECB printing money and the BOJ printing money, and China stimulating with liquidity in some form, kind of spending their foreign currency reserves, and then you also have the Fed on a path towards potentially printing money, then gold will really stand out as the alternate, which is what it is, the alternate currency, which can't be replicated, can't be printed at will.
Tell that to the Bitcoin crowd, Chris.
Yeah.
How often are you asked gold versus Bitcoin?
Well, that's true, but one quick thing about if I may, a couple quick things about gold versus Bitcoin. The first is that like the Chinese central bank is buying lots of gold, the Russian central bank is buying lots of gold. They're not going to buy Bitcoin. Number one, and number two, there is one quick thing. Like this whole concept of forks off of Bitcoins is like crazy to me. Like I can't buy a gold coin down the street here on 47th Street, put it in my sock drawer, and then wake up the next day and see another gold coin next to it. So the concept of being able to buy Bitcoin and then one day wake up and I have something else, which hopefully goes up in value, I think is like crazy and absurd, and should really diminish the value of these things. And the big picture is that Bitcoin was created by man, so it will be corrupted by and it has been. Gold was created by God. It can't be corrupted. It's the truth. It's the truth.
Right, that's it.
I don't know if I should continue. I'm thinking. Yeah, you need to drop the mic there. Because I'm like, yeah, I'm just gonna. All right,
Think about
Trey.
that. Seriously, no, it's true.
So short term, I've been doing this for about 18 years, and there's been 3 times when I yelled down to my wife and I said we can buy the Mercedes, we're home free, and they were Bear Stearns Sunday when Bear Stearns traded at $2. Gold first hit 1,000. The second one was QE3, which was September of 2012. open-ended QE, I was like, this is it, right? And Trump's election, I even showed my wife that gold was up $60 at 10 p.m. that evening. On each of those cases, which is when I was most positive short-term, gold went down every tick for a year from each of those places. So short-term, I'm batting zero. In the long-term case, and I don't want to get too much into this, but what is gold worth? Well, we all know it's worth a lot if you don't have confidence in the financial system. If you do, it's not really worth anything. Just go for it. Dollars, central banks, et cetera. But we have sort of a triangle that we use, which is the relationship between oil and the gold price, which I think is an important relationship. The inflation-adjusted high, which is really 1980, where that ends up. And then I have this theory, this is more personally me than Sprott, that gold is going to play some kind of a role when the dollar reserve standard finally dissipates into something that's unworkable. It won't be voluntary, it'll be in a crisis. We may be closer than we think. But I see sort of a 30% cover clause for every central bank. All the European central banks have plenty of gold to do that today. You have to get the gold price up to something in that $25,000 to $3,000 range. And even China and the United States could back our bloated balance sheets with something in that range. So to me, again, 18 years I've been doing this, and I have facial tics and everything to prove it. There's this $2,500 number where if we ever get there, I'm going to change my phone number. You'll never find me ever again, and I will never discuss gold. Can't wait for that day.
How am I going to find you for the panels?
This will be an empty chair. Yeah. But at 2,500, that's sort of where everything starts to get back into balance.
I remember when I started in the industry, gold was at 800, and talk of $1,000 gold was insane. So, I mean, does anyone confident we'll get back to $1,900, $2,000 gold?
I think what that speaks to well, in terms of I think that we will. I think that eventually when it's all kind of figured out that it's the story. It's the story is that when it's all figured out that you can't just print your way to prosperity, which is what we're doing. This is the story. It happens so slowly. That's the thing. It's a
painful ride.
Yeah. What I try to use as it's very painful. What I try to use as an analogy is even Argentina. Okay. Right. Argentina, which we could quote our president in terms of like the quality of their government. Maybe I don't know what he would say about them, but Argentina, which has a really a bad government, really well in terms of their fiscal policy, all right, and amongst other things. So their currency for a while they had huge hyperinflation, right? Huge hyperinflation. This was just a couple of years ago, and we were watching this because we have mines which operate in Argentina, and so we saw their cost going up, but the currency wasn't depreciating. So we were saying, how could the cost keep going up without the currency depreciating? How is this happening? And it happened for like a year in Argentina. Which is like it should have been pretty obvious to everybody that Argentina couldn't maintain that exchange rate, but it was maintained for years. So the point is, how long can the United States, which is the biggest, the baddest, the best, country, how long can we maintain this kind of false exchange rate relative to gold, like Trey saying, before it goes to 2,500, 3,000. And I don't know, it might take a while, but I think we'll eventually get there.
One thing we've all learned is the difference between inevitable and imminent,
yeah.
Which is something to keep separate when you're talking about gold.
I want to get a question in here about silver before we open.
Can I just add one thing, just to go back to what Chris said? If you go back to say 1980 or when gold hit the peak, and think about Trey's comment about oil and the gold relationship. How many ounces of gold did you need to buy a barrel of oil, or how many ounces of gold did you need to buy the average house in Toronto? Let's say I'm from Toronto, and if you just track that over the course of time, I think that trend will tell you that gold should go higher. And I think that number that Trey threw out is probably not an unrealistic number in the context of, what an ounce of gold will buy you today versus what it probably would have bought you 10 years ago or 15 years ago. And the number is a bit skewed, to be honest. And silver even more so, to be quite honest.
There's my segue, silver. So while gold looks kind of boring compared to Bitcoin right now. It's looking good compared to silver. Gold-silver ratio at what, 26-year high now. If you think it's been painful for gold, how can will silver catch up here? What needs to happen?
Yeah, I can start. So, look, personally, I think probably that ratio actually could go even higher. I think probably we just need to take a step back and just look at what happened probably over the past decade around silver. So I think before the financial crisis around 2008, basically you had a combination of high demand from the industry into silver. And then basically in addition to that, after basically the financial crisis, the demand probably weakened a bit. And you had also basically additional supply from the market, right? From mines, basically producing even more silver. So this created basically a physical surplus of silver, which had basically to be absorbed by the investment demand. So silver has been considered as basically a safe haven in terms of commodity. I think the general belief has been around, if you basically are long in gold, you can be very bullish into silver. So you can basically silver was used to leverage basically on gold. I don't think it's still relevant anymore. That's why we see basically this type of behavior now. I don't think you can basically have the same attitude trying to basically belong into gold and still have basically investors going heavily into silver. So that, I think, creates this distortion. So potentially, if you don't have volatility into gold, you can see basically gold ETF staying flat, but potentially you could see basically silver ETF even going down.
So you're not buying silver now?
I think we can still see actually silver going even lower than $13. Because I think the other element is, it's a byproduct at the end. So you may argue, okay, look, producers could reach basically their breakpoints. Their all-in sustaining cost is around 14, 13. Actually, most of the mines are, producing basically silver as a byproduct. So I think their pain point is even lower. So they still, keep, supplying the market.
Does anyone come bearing good news for silver?
I think silver, my view on silver is that the marginal demand for silver comes from retail buyers who will buy the ETF, like retail investors. It's the poor man's gold. So it is a monetary currency. It hasn't historically had the same status as gold, but it has historically had a status as a monetary currency, a hard asset. So if gold starts to go, and we saw this even at the beginning of the year, when gold hit like close to 1360, silver popped. So silver went up more than on a percentage basis, I think, more than gold. And so I think that again, and that's due to the marginal demand from a retail buyer. It's also a lot of retail U.S. buyers, right. And so I think that if gold moves higher, if it has a pop, silver that ratio will decline.
Or if you get a production crunch at the mints.
Yeah, exactly. That's kind of what happens. It's like people go, wait a second, I should have some gold. Well, whoa, it's 1,400. That's a lot, right? Like I should I buy 100 silver coins or should I buy one gold coin? And they buy 100, right. They keep doing it and they bring the price up. Right. So I think that's my view on silver. But yeah, I agree with Len in terms of the fundamental supply and demand analysis.
Trey?
So at Sprott, corporately, we've learned to, people would like to own palladium. We've got palladium for you here, or platinum. Right. I personally am more of a monetary guy in the way I approach this, and at least central banks, haven't been using silver since the 30s. So to me, the further we go from the 30s, that gold, silver, I always say it's going to 100. That's sort of where, I think the problem with that view is that we have never had a gold rally without silver outperforming. So I'm torn here, right? Why would I root against myself? I want silver to do great.
Of course.
And you mentioned the numbers at the beginning of this year. In 2016, which seems like 100 years ago, but when we went from January 1 to August 11, gold was up 28%, silver was up 42%, and the GDX was up 125, and the GDXJ was up 185. So it's really, I'm rooting for silver. The other thing, it is hard to get I think for most investors to get their hands our arms around the concept that a gold coin is worth, $1,400. It's just a little prohibitive. And there are a lot of investors, for some reason, who think their precious metal should have utility. Personally, as money, dollars don't have any utility either. So gold's a better, store of value form of money than silver, precisely because it has, quote unquote, no utility. You don't eat it, put it in your. But for those that want that, silver, is a very attractive option.
Carrie, any thoughts? You want to bring it home before we open up to the floor?
I kind of agree with Trey. Like, I'm sort of mixed on silver too, because it is, at the end of the day, it's an industrial metal, and if GDP production drops, if GDP growth drops, I think silver demand is going to drop, which is going to hurt the price. But there is this historical relationship between gold and silver, and that tends, as you say, tends to push the price up when gold goes up and tends to outperform. So it kind of depends on, for me, the depth of the recession. If it's a really nasty recession, then I would say silver might underperform over the longer term. Maybe in the shorter term it could outperform. The other aspect is there are not a lot of silver stocks relative to gold stocks. So at the end of the day, a lot of investors tend to gravitate to where they have more choice, more option, and there really isn't that many good silver companies. I mean, if you look around there, maybe there's only 40 or 50 exploration/producing companies. So.
All right. I want to open it up to the floor now. We have a few minutes.
Yeah. If we're seeing this large valuation, cost of capital, privatization for the juniors, the large companies, why aren't we seeing more M&A? And then the corollary would be, how's a public investor going to navigate the junior space if the Inicos of the world aren't having some wholesale consolidation?
So I'll put one M&A comment, and you guys can handle the other one. We've been working on a joint venture with John Hathaway and Doug Groh, the Tocqueville people, for about 6 months, and it's basically an M&A special opportunity fund. And in preparation for that, we circulated internally every week a hit list of everybody from Peter Grosskopf to John Hathaway to me, what is the most likely company for a takeover? And we ranked them on a scale of 1 to 10. And the problem with that is not a single one of us had, Barrick and Randgold. Not a single one of us had Goldcorp. And, it's really hard. You can look incredibly stupid trying to predict. The only one that's really been a pure is the one that was just starts with a V.
There was Atlantic Gold.
Atlantic, excuse me, starts with an A, close. So Atlantic, this is obviously not my bailiwick. I'm more of a senior guy, but Atlantic's really the first example of a true M&A, classic that was on people's lists, But that's the only one. The other ones have all been.
I mean, what I would say just about the M&A is that if you're an Agnico, like if I were the CEO of Agnico, for example, what I would say is, why should I buy a company at a premium and then spend the money to build the project? Why not earn into the project with the guys on the ground who are currently doing the work, and then potentially, so I could I could say earn into 70% by spending, say, 50% of the capital or something like that. And then if I earn into 70%, then that's great. Then the junior has 30%. And then the junior might, even at that point, if the market doesn't turn, they might have to pony up their portion of the capital to get the project over the line, in which case you may have an opportunity to buy it out. If the market does cooperate, then great, I have 70% of a good project. So I think that these are, I think that's the new paradigm. I mean, in terms of an investor, you can buy companies. Like I think that, for example, like we own one called Midas, which is here presenting. And Midas, I think, has an opportunity to enter into an agreement like that with Barrick. They have a big project in Idaho, which needs a lot of capital to be built. And you could have a win-win scenario, because they actually, they could use Barrick or the Nevada JV's infrastructure and cut out capital costs to get the project built, and they could even have Barrick hopefully maybe earn into a percentage of the project. It's trading at a really big discount to its NAV. So if Barrick spends, say, is required to fund 70% of the capital, earn into 70%, that's fine. Then we own 30% of this great big project, trading at currently trading at a really big discount to its net asset value. We'll at least double our money. So those are, you have to find the really good projects where you do think that a producing company would be interested into earning into a portion of it, and then hopefully you still get value through that kind of scenario.
The other short answer to your question, and I'm sure you would agree, these companies are petrified from all the mistakes that were made in the 2008, 9, 10 period, and we're just now cleansing the system of all of those, things like Pascualama, right? It was supposed to cost $1.8 billion, and it shut down in 2 countries. Environmental, it cost $9 billion is the current thing. So, it's not popular to go out and buy somebody right now. The Mark Bristow, you can talk about this more than me, but the Mark Bristow thing's very unique. Everybody trusts him, right, to do the right thing, and there's a lot of low-hanging fruit at Barrick. But I think the whole M&A thing is a little overhyped at this point for the next year or two.
For me, I don't think you ever want to own a stock because you think it's going to get taken out. I think you own stocks because you like the management team, you like the way they run their business, you think the valuation is reasonable, and it's in a good jurisdiction. So those are kinds of things you should look at as a portfolio. Though I think you probably, for me, you should own 75% of your name should be producers because they generate real cash and they can survive cycles and they can make you good money in a hot market. And then 25% of your portfolio is the speculative side of the spectrum, which is companies that they're a developer, they have a resource, maybe they're drilling. I mean, we get the odd good exploration success in the market, but I think to buy a stock because you think it's going to get taken out, you're going to probably get disappointed.
I'm happy you brought that up.
As our banker, is your phone ringing off the hook?
Actually, we are busy on a couple of acquisition financing, and I tend to agree that probably we'll see more and more of those. I think there is a big distinction between basically exploration and producers. The one you brought up, Atlantic, Santa Barbara, it's a prime example. I think we might see a bit more of those because also there is a big theme into the market around what these companies are going to do. Basically, you see Barrick, you see Newmont, etc. So these producers, mid-tiers, basically have probably to also join forces, optimize operation to be a bit more attractive also to investors. And then on the exploration side, actually the numbers I was referring earlier, basically more exploration into into these companies. Funding is coming from basically investment, small investment, but from the big guys. So you can see basically BHP investing into Midland exploration. So Midland is doing all the hard work. BHP has an option value. And basically, I think we will continue to see more and more of those.
I'm going to get one more quick question in.
Yep.
Yes.
Thanks. From an appetite perspective, are there any interesting observations between the international versus the U.S., either individual or institutional buyer?
Wait, institutional buyer, like who? Like who? What do you mean?
The question is more U.S. versus international.
Yeah.
On the appetite, are you seeing some observations there?
Oh yeah. Well, one obvious point there is that the Aussies are definitely in the market now, looking to buy Canadian or other North American assets. So the Aussie miners, their currencies declined. They had a different model. They were kind of more. They didn't build huge projects and kind of blow out their capital. They have kind of smaller underground projects to a degree where they are really tight on their capital. They're generating free cash flow. A lot of them are paying dividends. The Aussie dollar depreciating has helped their cost base. So their stocks have done really well, and they're looking to buy. So we saw Northern Star buy the Pogo mine from, I think it was Mitsubishi in Alaska. And then we saw just recently, like Trey said, St. Barbara bought Atlantic, which is in Nova Scotia. So and we know from talking to these people, to these corporates, that they are sniffing around. I mean, even Newcrest, the biggest Australian miner, bought a big mine, the Red Chris mine in northern BC. So we are seeing Aussies potentially buy here.
Panelists. Did you want to add something on that?
No, I completely agree.
Okay, perfect. Thank you to Trey, Chris, Alain, and Carrie. Thank you for joining us this morning.
Thanks for
Thank
having
you
us.
You're welcome.
for coming.
Thank you.